welcome back to Real Estate According to Amy. I am Amy, and I am here with you today to just talk a little bit about, we're kind of closing in on this kind of kickstarting your business series as far as the nitty gritty boring stuff. It's not all boring, but it's just kind of getting your business set up right and getting you set up for success. Things like figuring out how to, set up your calendar and how to set your values and your goals and how to figure all that stuff out. The other thing I wanted to talk with you about today is your business, you're a real estate agent now, which means you are self-employed. Okay. You are a business owner. So not only are you self-employed, but we want to get you to the point that you're actually a business owner where you can leverage out your business, where it's making money, whether you're working in it or not. Like that's our goal. So one of the ways that I recommend doing that is this book right here, The Millionaire. Millionaire Real Estate Agent. It doesn't like it. It wants to keep glaring it out, but I'm really sorry. The Millionaire Real Estate Agent. Mine is spiral bound. I don't know if you noticed that or not, but it's got spiral, which means it's a special edition that you can track down and find and buy. If you go to the Red Store, KW Red Store, because it is actually written by Gary Keller, but it applies to really not just real estate agents, but all business owners. But the spiral bound one's really cool because it has inside of it, it has tabbies to help you find each section. Do not get this book on Audible and listen to it and think you're going to glean a whole bunch of information from it. There are so many tables and charts and diagrams in this book. You actually need the physical copy of it, but I highly recommend it. Today, we're going to dive into the what's known as the budget model. And kind of jump into that a little bit more to figure out how to run your business like a business and what growth looks like and what you should be spending on what things. Number one is I highly recommend always leading with revenue. And what that means is that we are going to make money before we spend money, right? Don't just keep shelling out money in hopes that you're going to buy leads and buy transactions. Don't do that. We're going to talk about how to organically generate transactions as we move through this series. But keep in mind that you want to run your business like a business. We're going to lead with revenue. And so a lot of the things that I'll show you are things that are going to be free. Things like Canva. We just talked about on the last training, which was what apps are helpful on your phone. A free scanner app, right? So most of those things I talked about were all free or very low cost, like Mile IQ, which is like $60 a year. It's invaluable. You'll have a bigger write-off than $60 a year because you used it. So things like that, right? So we want to try to keep it free or very low cost, especially that first couple of years in the business as you're getting your business running and going. Okay. Now with that, I do highly recommend that you immediately find an accountant, somebody that's going to do your taxes for you, and somebody that can help guide you and push you along in the right way and make sure you're tracking things appropriately to make your end of the year and filing your taxes easier. Also, the tax professional can help guide you in setting up your business the right way, whether you should keep it under your name or open up an LLC or how to do all of that. If you do decide to go like an LLC route, do talk with your broker and figure out what your brokerage requires, because your license can't be in an LLC. Your license has to be under your name, but most brokerages will allow you to reassign your commission to the LLC. But just keep in mind too, like the California DRE has restrictions on that, such as you have to be the sole owner of that LLC, or all the owners of the LLC have to be licensed in order for your broker to actually assign the commission to that LLC. So there's lots of little loopholes. You're like, why would I set up an LLC, Amy? Talk with your tax professional. That is way outside my realm of professional expertise, or what I would even recommend that you do. So talk with a tax professional, see how to set your business up right from the very beginning and get the ball rolling in the right direction there. Now, that being said, your tax professional is also going to tell you what you can write off and what you can't write off, and go through all of those items. Okay. Today, we're going to talk about how to set up your business. That's between you and your accountant and what you actually decide to write off. But the Millionaire Real Estate Agent, the reason I like it is for several reasons. But one thing is that they've got it set up and made it pretty simple for you to track your business and be able to see how you're doing. They wrote this book, The Millionaire Real Estate Agent, by going out and talking with several agents that were millionaire real estate agents that were netting $1 million. And they were talking about what their business looked like, what their strategy looked like, what they were spending on lead generation and technology and business expenses and cost of sales and salaries. And they figured out what that average was, what that line was to get you into that role. And you're like, Amy, I don't even have one transaction. Why am I worried about being a millionaire real estate agent? Well, because maybe in 5 years, that's where you want to be, right? And even if it's not, it's a good way to set up your business for success and make sure you're keeping your expenses in line. So the MREA has a chart of expenses. Let me share my screen here. I think if I share this one, there we go. So now you should be able to see the Millionaire Real Estate Agent chart of accounts there on my computer. I will see if I can upload this or attach it in the comments section. I think I can attach files in the comments section. So I'll try to get this file uploaded so that you guys have access to it as well. So here is your chart of accounts. The reason this is important is that we want to make sure that we are tracking our business expenses in the right categories. Okay, and this shows you how to lay it out and update it. It also gives little summaries. So this is a pretty good way to track things. Now that you're a business owner, you absolutely need a profit and loss statement that shows how much profit you have coming in versus how much you have going out and what that looks like at the end of the month as far as was it a gain or a loss? Did we come out ahead or did we come out behind, right? We want to come out ahead. That's our goal. So inside of here, we have our income categories, which are residential income, other real estate income, so things like profit share. Inside of residential, we have listing, sales, referral, and leasing. Obviously, if you don't do leases, then you can just ignore that category, but it's still there. If you did like commercial income or commercial real estate, that would be in here. Or maybe you're watching this and you're like me, I don't even do real estate. I have an insurance company. Well, then let's categorize what kind of income you have coming in from your insurance company, right? Same principles apply. Okay. And this is our gross income. So this is before anything else is taken out of it. Okay. So like maybe your brokerage takes a split or maybe you pay a fee out of it. This is including that fee. What's the gross commission from that sale? Okay. Now, anything that's taken out of your commission, anything that's taken out on that demand, that commission demand statement, that's going to be under your cost of sales, which is our next section, the 5100 section to 5200. That's going to be any commissions you pay to your office. So your split paid to the office. If there's a royalty paid, like Remax, KW have royalties. Some people pay a commission split. Some people pay a fee. With Realty One, it's a fee. With most offices, it's a split that you're paying. That's going to go on that commissions to office. If you have any other cost of sales, listing cost of sales, buyer's cost of sales. Okay, these are things, cost of sales are things that are paid out of the commission that would not get paid otherwise unless there's a closing. Okay, so like your transaction coordinator may be a listing cost of sale. It's something that generally we pay at the close of escrow, and we generally don't pay our transaction coordinator if, in fact, it does not close, right? Your listing photos, not a listing cost of sale, because even if that listing does not close, you still have to pay that photographer, right? So it's not a cost of sales. It's not something associated. If you had things paid out like listing specialists, showing assistants, well, showing's probably not, but if your showing assistant gets a split from the buyer transactions, then the portion of that is contingent on that closing would come out of there. If you're paying any bonuses or anything like that to any of your staff from closings, that would go on here. So, right. So anything that only gets paid out if there is a closing goes on your cost of sales. Now, if you paid for the buyer's home warranty, not a cost of sale, that's going to be a marketing cost because we did that to help secure additional buyers in the future or to help, make somebody happy to lead to additional transactions. So things like that are like random things that you paid. And again, anyways, so for the most part there, hope that makes sense. If you have questions about that, feel free to throw it in the comment section. Then we get down to our expense section. Here's where we have our salaries and benefits. So if we had like a on-staff transaction coordinator, an admin, anything like that, that would go under salaries. Benefits, right? Payroll processing, payroll taxes, benefits processing, benefits. You know, just a little side note on that. That's one of the nice things about Cyberbacker. So remember, I also very heavily involved with Cyberbacker, is that with Cyberbacker, number one, it's much lower than somebody's average salary in California. And number two, you don't have all of this payroll processing, payroll taxes, benefits. You don't have all of that overhead in addition to the salary that you're actually paying them. So it's pretty cool that way to go with a Cyberbacker as your transaction coordinator or your admin. You're like, Amy, for a transaction coordinator, yeah, actually, Cyberbacker for transaction coordination, once you're closing more than like 2 or 3 deals a month, if you're consistently closing 3 deals a month, it's probably going to be more cost effective to hire your own on-staff transaction coordinator than to rather pay per transaction for transaction coordination. And then of course your admin and your ISA and everything else. So anyway, salaries and benefits are in that next section. You got a little bonus spiel there. And then we have lead generation, right? What are we doing to generate leads? Entertainment, internet lead generation, print, direct mail, advertising. So right, this is where I said, hey, like paying for that home warranty, that's marketing or lead generation, right? It's really more marketing than lead gen. So in here, marketing activities, so that would go into this area as well. Then we have our occupancy. That would be if you pay desk or fees, utilities, repair, maintenance, depreciation of capital improvements, or other occupancy, right? So occupancy is just like, hey, I rent a desk space, or not like necessarily your office dues, right? If you have office dues on a monthly basis, that's different. But this is like, hey, I rent an office or a desk, and this is the cost associated with that. Or maybe you have a home office and you want to account for your portion of the utility usage, and that in your home office, you could put it there under occupancy. Then we have communication and technology, your telephone service, right? Your cell phone, your answering service, your internet service provider, website maintenance, creation, maintenance, other communication technology, right? So that would include over here on the little blurb, you know, custom site creation, enhanced IDX, podcast, standard IDX solution, templates, videos, video tours. I would say virtual tours is probably going to be under marketing, or lead generation, not communication. That's just me. So just some little things there. So you really got to think about what the purpose of it is. Obviously, website and website creation and the website maintenance is there, but if you're going to be running ads and that type of thing, that's probably lead generation. Education and dues. Here's where you have your education, training, coaching, books, audio, visual, dues, other educational. So this is like, hey, I'm going to go to a conference. The cost of that conference is under education or dues. Your cost for your MLS membership, your whatever that might be, right? Your opening your e-key subscription, all of that would come underneath education and dues. If you're buying any books, you have a subscription to Audible for self-development, and that falls under here as well. Here's your automotive ones: depreciation, gas maintenance, other auto, mileage or interest portion of the payment, purchase, percentage of lease. This comes down to, right, knowing what your tax professional wants you tracking in this area. Here we have equipment and furnishings. So this would be things like, hey, are we renting equipment? Do we have a depreciation of capitalized equipment or furnishings, repair, maintenance, property tax, other equipment or furnishings? So, right, so we buy a computer, a printer, things like that go underneath here. We bought a new desk for our office, right? So, and then you'll figure out whether they're supposed to be depreciated or not based on talking with your CPA. Supplies and office expenses. These are banking charges, office supplies, consumables. That's like paper, ink, things that get utilized up. Office operations or other office supplies or other office expenses. Okay, this is where like if part of your dues covers copies, then the copies would get noted here. Let's see, insurance here, your automobile insurance, your errors and omissions, property liability, other insurance, anything that you're paying out for insurance, including equipment insurance, goes there. Professional services is the next category. Your accounting, tax preparation, any legal services that you've got or other professional services goes in here. Okay. Other expenses, charitable contributions, loan interest, office transaction fees paid, state sales, franchise taxes, other expenses go there. Okay, that's all your business profit. Okay, now you'll see here that we're going to come back to the section here where it's below the line. So we're going to take all of our income minus all of our expenses to get our business profit. Then there's this business below the line income and expenses. These are things that aren't directly a result of business, right? Like interest income. We didn't earn that income. We just earned it because we kept money in our account. So it's below the line. It doesn't actually count towards our gross profit, but it does count towards our net profit at the end. Your profit share income, vendor supplier income, other income here, and then like anything paid out if you had like a profit share program for your employees, pre-tax expenses, income tax, anything goes there. So anything that you're maybe writing off that's not actually a business expense technically goes below the line, because we don't want it to affect what we're looking at when we look at our business profit and expenses. Okay, and then that we factor those in for that net income at the bottom. So that's what you're going to want to be tracking on a monthly basis to get your profit and loss statement. Okay, so we put this in there that kicks out what our profit is, what our expenses are, and gives you your profit and loss statement. A good CPA should be able to track that for you. And I highly recommend picking a CPA that maybe is familiar with the MREA chart of accounts so that you can track things appropriately. Now, the reason that this is important is that, let's see here, I've got somewhere, let's just go desktop. I've got a photo for you. Here, you should be able to see this now. So this is right out of that book. I actually took this picture this morning. Here is our budget model. So this is going to show you, based on where you're at in your business, about where your expenses should line up with your income as far as percentages to make sure that you're on track in order to be that millionaire real estate agent. And you'll see it's broken down by categories. Here we've got if you're $6 million, $10 million, right, where your GCI is about, it's just factoring in and giving you kind of a breakdown. So if your GCI is around 180,000, so as a new agent, that might be where you're at. Year two, you might be over here in this 10 million or 300,000, you know, and then as you go up, things are going to change. So here is where it's going to say like, hey, based on 180,000, your cost of sales is going to be about 21,000. And your gross profit is going to be 88%. And then from that, your expenses should be 33% and your net income should be 55%. So as you can see, this is going to change as you move up. So if our cost of sales, this is based on a cap system here. Here our cost of sales is going up because now we're adding people to our team, right? So we're adding in expenses. So you'll see that that cost of sales is going to continue to go up as your income goes up, because we're going to change our team structure, which we'll get into in a future training down the road. And then here's our gross profit, right? So if this is our total gross commission income minus our cost of sales equals our gross profit. And then you'll see it goes 88, 93, 80, 69, 71. See how that changes as you grow? But then look, if you're like, well, man, I only get 71%, but it's, you know, went from 159 to 850. We're okay with it going from 88% to 71%. Okay, you guys tracking with me here? So you're probably going to pay attention to this first column first. Your expenses should be about 33% your first year in the business. So if you look at your expenses based on what you have coming in, that's where your expenses should sit. Okay, we're going to break that down here in just a minute. Okay, and then your net income should be between 55 and 40%. So that's what the millionaire real estate agent is working off of, is that you're going to walk away keeping 40% of your income is the bottom line. Okay, your first few years in the business, you're going to have less expenses because you don't have staff and showing assistants and buyer's agents and all that you're paying out. You have less, so you're going to be making more, okay, of your splits. Okay, then if we scroll down here to this next section where it actually breaks out this expenses, right? We went 31, 33, 33, 30, 29. See how that expense category always stays somewhere right around 30%? Your expenses should always sit around 30%. And you're like, Amy, but you said there was more expenses. Well, there are, because we have our cost of sales increase, right? We have people that we're paying splits to, like our buyer's agents and now listing agents. As you continue to grow, that's getting paid off of the closing, which is a cost of sale, not necessarily a salary. A salary would be your admin and those type of things that get paid on an hourly basis. So here's that expense breakdown. You have salaries are going to range right around 11 to 12%. Okay, there is this bump. If you'll look at, there's this bump that happens kind of in this $500,000 range of gross commission income, where all the numbers tend to like kind of tweak a little bit, because that's where you're going to hit your growing pains. Okay. So that's where things start to go up so that we can make more money. So they go back down. Okay. Our lead generation should always run about 10%, whatever your income is, 10%. And this is really good because this is if you bring home, if you have a closing and your closing is $10,000, then we know that, hey, we should set aside 10% of that for lead gen to get to my next closing, right? Your occupancy should always roll right around 1%, half to 1. And that would again be your office space, right? So if you don't have office space, you're using the drop-in space, which I highly recommend as a newer agent, then your occupancies might be even lower than what it's showing here. Technology should always be right around 1.5 to 2%. Okay, it'll be your website, that type of thing. Your phone service, right, should be right around 1%, and that might be, it's a little bit more than phones as you look at that profit and loss breakdown from the chart of accounts. Our supplies are going to run right around 1%. Education and dues, same thing, right around 1%. Your equipment might be about 2% to 1%, and your auto insurance there. Right around at the beginning, it might be a little bit more expensive, but auto expenses is one of those things that doesn't jump substantially as you're adding people to your team, right? In fact, it probably goes down. So as you see, it starts at 3.3 and drops to 0.8. So we always want to make sure that we're tracking our percentages as it relates to our gross income, so that we understand and make sure that we're keeping things in check and in line as we're moving through our budget. This also helps us to set up for like the next year. If we're like, hey, we want to grow to 300,000 this next year, this is kind of our roadmap as to what we should expect to be paying and things like lead generation, technology, salaries, right? So this is our roadmap for that. Okay, I hope that you found this helpful. If you have questions, dig in, make sure you comment below, search me out, shoot me over a text message. I'd be happy to answer your questions this, but you should be tracking these things. Along with that, we kind of mentioned the Mile IQ, make sure you're tracking that. And then just make sure you're keeping things in check, saving receipts, talking with your CPA so you know what you should be tracking and writing off and what you shouldn't be. And that you're keeping it in an organized fashion by doing that monthly profit and loss statement and categorizing all your expenses and your profit, so that it makes it super easy when the year ends and you're getting ready to close out for the year and file your taxes. You know exactly where you're at. Also, if you're doing that profit and loss statement, then it makes it easy to do your quarterly taxes. Yes, I just said quarterly taxes, and you may be like, oh my gosh, what's that? So once you're self-employed, you may want to pay your taxes on a quarterly basis based on, you estimate what your taxes are going to be at the end of the year, and then you pay based on that estimate, so that you don't get hit with additional fees and such associated with not paying those quarterly taxes. So that's what happens when you become a small business owner, is that you pay quarterly taxes in addition to paying self-employment fees and different things as part of your taxes, a self-employment tax. So anyways, hope that was helpful, that MREA chart of accounts and this graph here. I will get these both uploaded. I think you can do it like in the comment section or whatever. I'm not actually going to do it. Abby, my cyberbacker, is going to take care of that for me, but I'll get these documents over to her so that when she uploads this video, she can add those in for you guys to be able to access both that chart of accounts and this budget breakdown. But again, this budget breakdown in the chart of accounts is all found in the Millionaire Real Estate Agent. So go out and get that copy of that book so that you can set that up and set yourself up for success. I hope you guys enjoyed this. Have a fabulous day, and we will see you soon.